We have with us Rudramurthy joining in on the show, Nooresh, Merani, and on the fundamentals we have Sandip Sabharwal as well. Nooresh, let me quickly come to you. What trend do you now see for the index? Quiet start, but we've softened about 100 odd points.
So the trend has been we are still struggling in this range of 19,300 to 19,600 now. And at the same time, we are not seeing a downward drift in the broader market. So we've not seen the mid cap or the small cap indices take a hit today. So overall, we continue to be in this tight range. Once we start breaking 19,550, 600, then we start getting into a momentum on the upside. Below 19,300 close, it becomes a little negative. So right in the middle of the range, looking at stock specific, positioning is more better. So we've seen paper stocks do well. So keep looking out for such sectoral rotations.
What about you? What do you make of the market setup, especially on the Nifty Bank, which continues to be the weak link really, because for 6 days on the trot, it's been on the declining trend, and today it's the private banking names which is pulling that index lower.
Yeah, even for me, definitely Bank Nifty is relatively weaker compared to Nifty, but definitely coinciding with levels what Nooresh mentioned. Even I feel Nifty around 19,250 is the range on the downside on Nifty future, and on the upside it is around 19,650. So it is a 400-point tight band within which Nifty is trading, and I feel being very far away from the upper band, which is 19,650, there is likely chance that we might give up on the downside. But let 19,250 break before I start initiating shorts aggressively. But this market is definitely showing that signs of tiredness, even though it is holding that range on the downside at around 19,250 to 19,300. But for me, banks are relatively weaker to short compared to that of Nifty.
So that's the take coming in as far as Nifty Bank is concerned. Definitely the weaker link of sorts. But let's welcome on board Sandip Sabharwal as well. The one space which is definitely outperforming for now is the entire defense pack, right? And especially the shipbuilding names, the Cochin Shipyard, Garden Reach, Shipping Corporation of the world. Do you think these are just one-day moves that, keep on happening on account of momentum, but it's not really an investable universe?
The shipping corporation doesn't really have too much of story, but I think the other shipbuilders do have stories going for them, and the recent announcements by the government of further augmenting the shipping fleet, possibility of these companies getting more orders. So I think all that is a reality. These are relatively, in the context of the overall market, these are relatively small companies. So to that extent, whenever interest comes in such small companies, we've seen that the price movements tend to get exaggerated. So I think that's something which will keep on happening. Directionally, next few years, the stories will still play out. In the near term, stocks obviously overshoot, then they give correction. So I think people need to be careful, especially who have a short-term horizon, need to be careful when they buy, because at any point of time, 10-20% kind of fall can happen in many of these stocks.
Sandip, on an overall market basis, I wanted to understand what is it that you're making of the FII trend? The fact that they've been buyers of late, but buyers only in big blocks. I mean, cases in point being a JSW Energy, or for that matter, Adani names, and not really buying the overall market, so to speak.
Yeah, so I think that buying we can't put in FII buying, because those are specific incidents of purchases by specific funds and specific companies. Overall, the trend has been weak in terms of foreign investor flows and could remain weak in the near term as the dollar remains strong. And then there are some concerns on China, etc. Because see, what happens is that a lot of the flows tend to be from emerging market funds, and to that extent, when the other markets are not doing well, then when there are outflows, then India tends to also get some outflows. So near-term picture for foreign investor flows is hazy. And I think once over the next few weeks, as things play out, as the dollar index sort of peaks out from this the short-term kind of rally which is staging, and as yields peak out, then we'll see funds flow start again. So, but in the near term, I think it could remain weak.
That's a take coming in as far as some of those stocks are concerned. But Sandeep, do you track VIP industries closely? Because the earnings were rather bad. There was a resignation at the leadership level as well. The stock or the company has been losing market share. But the stock had been holding up okay, at least if you look at a bit of a long-term chart. What's your view on this versus Safari?
So Safari obviously has done much better than VIP over the last few years. They have gained market share. They have taken away market from VIP, and more importantly, they have also grown in terms of profits. VIP has lagged behind, and I think it's also had to be done do with the leadership issues, etc. So management change is not necessarily bad. So I think if a management is not performing and they are losing market share, they are not able to meet the guidance which they gave on a continuous basis, then it makes sense for the board to replace. In many cases, we have seen management changes could turn out to be positive for the company. So I'm positive on this management change per se. VIP, I obviously track quite closely. I think last quarter could have seen a bottom in terms of its margins, etc. Things could improve going forward, and that's what is getting reflected in the price movement after the results.
What about, since we're talking about urban consumption and urban discretionary, what about Bata and the rest of the footwear companies? Of course, Bata today is seeing quite a bit of spike of around 6%. But what's your view?
See, Bata cannot be compared with most of the other footwear companies. It has a space of its own. Again, here, it's an interesting story because I think they have got into new spaces. Their sneaker segment is doing well, athletic, leisure, clothing segments they have got into. And there's news flow of some tie-up with Adidas, which we don't know whether it will happen or not. But if it happens, it could be a significant positive. Overall, I think here also in terms of Bata, the performance seems to have bottomed. And from here on, I think things will only improve. So it's an interesting story. It's not very cheap in terms of valuations. X of any deal with Adidas. If some Adidas kind of deal happens, then the valuation paradigm might completely change. So I think it's a company which I think definitely should be on the lookout.
Well, for now, Bata is clearly one of the star performers. In fact, Somit the other day was, culling out some interesting data about the maximum or highest EPS upgrades that one has seen in Q1 FY24 and the highest EPS downgrades that have also come in. Let me quickly take it across to him, get in all that analysis first.
Well, what we have done here is we have compared the FY24 EPS post the earnings season, what has been the upgrades compared to what the numbers were before the earnings season started. Now, what we're understanding here is that Zomato and PB Fintech are the only two companies that have seen a more than 100% rise in the FY24 EPS, which means that their FY24 EPS has been upgraded by more than 100% by analysts. Now, this could be on the back of the fact that the Zomato reported a profit in the first quarter of FY24 and PB Fintech's losses were on the lower side. Along with that, there is LIC, HPCL, BPCL who have seen an EPS upgrade of around 29 to 44% on the back of strong first quarter numbers. Indigo reported its highest ever quarterly profit, and hence if you see the company's EPS has been upgraded by around 25%. Then there is Tata Motors, Seat, Suntech Realty, Lemon Tree which have seen an EPS upgrade anywhere between 18 to 24% post the strong Q1 numbers. Now on the negative side, to everyone's surprise, chemical companies are not on the top of the list. There are very few chemical companies like Sudarshan Chemical and Gujarat Fluoro on the top 10 list who have seen an EPS downgrade of around 22 to 26%, but it's V-Mart which has seen the biggest downgrade in their EPS of around 88%. This is after the company reported a surprise loss in the first quarter, while the outlook also continues to remain a bit sluggish. But then there is Sagar Cement which saw an EPS downgrade of around 29%, largely on the back of their high cost raw material and because of lower pricing power. Then there is Nykaa which have seen an EPS downgrade of 27%. Mahindra Logistics has seen an EPS downgrade of 23% because of delay in its integration with Rivigo. Along with that, there is Healthcare Global and Laurus Lab which have also seen an EPS downgrade of around 18 to 20% because of weak outlook and weaker first quarter FY24 numbers.
Okay, so that's the take coming in as far as the big upgrades and downgrades are concerned. But time now to slip into a very short break. But as we do that, listen into the latest commentary coming in from Nilesh of Envision, because he pointed out a lot of stocks that they're still betting big on.
way I look at IT, and I'll probably slightly cast a more long-term perspective. I think the big boys in IT, I think they are great capital efficient companies, but they're going to be relatively moderate in terms of their growth rates. No matter how great the opportunity is.
The size has become large for them.
Their size has become so big that I think it's going to be hard for them to kind of grow in double digits. Even if you look at, say, an Infosys or a TCS, the last 10 years, and in last 10 years, so much of technological advancement has happened. They have grown at probably 10, at best maybe 12% in terms of the revenues and maybe 13-14% in terms of earnings. Now that's not bad. It's good, but they're not necessarily those hyper growth stocks. So currently, one company that we've just recently invested in, we own it, is essentially MapMyIndia C Infosystems, which went public, I think, a year and a half back. I think so. So again, coming back to technology, I still think that there are several opportunities in the broader market. I think if you take your eyes off the top 3, 4, 5 names and look at maybe some of the other companies, I think there are interesting opportunities. LTTS is something which we continue to own. Newgen is something that we have liked, and I think it's a very interesting company also. So I think for now, I think we have these 3, 4 such kind of companies which we believe have a very good runway of growth, but I think we keep scouting out for opportunities there.
Back with closing trades right here on 80 now. Let's just revisit where the closing trades are settling in at. 19,376 is where we're currently at, a dip of about 0.5%. This after a quiet start, but we were unable to hold on to that flat move soon after we did dip. ITC, that's a big drag today. It's down about almost 2.5% as we speak. Tata Motors, L&T, Reliance is down 1.25%. And then, of course, you've got the IT majors as well. After a bit of a respite coming in yesterday, once again, they are down and out. So TCS, Wipro, they're all in the red as we speak. Even Infosys, which was a big mover yesterday after that deal that they got of about $1.6 billion from LG. That said, Sandip, wanted to get your opinion because, the street seems pretty divided on whether or not to start buying IT at all. And, we had Nilesh Shah from Envision Capital, for instance, this morning, and he said that it's not going to be India's decade, but decade. And Indian IT will be able to transform and catch up with the AI trend. But then again, a lot of the street is still a naysayer and still away from IT.
The technology sector has a very diverse universe these days. So there are some companies which are specific into some particular set of industries. So they might actually do well catering to defense, or some companies into, let's say, the travel industry here and there, or some companies doing work on more on AI, EVs, etc. So I think X of that, if you ask me for the broader technology space, I think things will still be tough. So I think for the larger companies who have a much more diversified client base and business, it's going to be tough because the business is still slowing. These sporadic deal announcements, I don't know why these companies are doing them. I think it's more to create some positivity around them. But otherwise, directionally, as we saw in the results which just came out, and the overall trend which we are likely to see over the next 2-3 quarters, things are still going to slow down.
Enough, but let's talk about some of the price volume buzzers as well. Wanted to highlight Birlasoft in an otherwise weak market. That's hit a 52-week high on an intraday basis. It's been advancing for 5th consecutive month, and the volumes today are 2x of the usual average that we have seen the stock holding up with a gain of around 4%. Bata India, as we just flagged out, that's showing a U-shaped reversal. It's breaking out from a 4-session consolidation, surpassed the 50-day moving average, and the volumes are 5x of the 20-day average that we have seen. So Bata India sitting pretty with a gain of around 6%. Escorts too has hit a record high on an intraday basis. It's been advancing for 5th consecutive month, and the volumes are on the heavier side as well. Nooresh, your view on a couple of these counters, Bata India, Birlasoft, Escorts, and even let's add REC for that matter. Any of the stocks that you like from this list?
So watching out for Bata India, because today is a big volume day reversal. But it has taken resistance around that same recent highs of 1770 odd, not able to sustain those levels, but could be interesting if it sustains above that 1770, 1800 mark. REC has been in a very strong trend. Tough to actually get in at current prices because the risk rewards don't really fit in to the stock, but the trend continues to remain positive on REC. So would wait for a dip on REC to participate, but Bata could be something on radar on dips to 1700 or above 1770, 1780 levels.
Sandeep, where will the market get its next set of triggers from? Given that earnings are now behind us, that seems to be well digested. You think inflation in the near term and more what we hear from the central bank with regards to ICRR, which they said they're going to be reviewing on 8 September, is that going to act as a trigger?
See, I think the weakness in the market has nothing to do with what RBI has done or ICR. So I think that's not the real thing. The real thing is what's happening globally. So we have seen globally markets start to weaken. We have seen what's happening in China. We have seen what's happened to bond yields and the US dollar index. So it's more to do with that. And as those things stabilize, as the markets give up some of its gains from the top, then I think in any case, the longer term outlook still is positive for equities. So we'll again start buying coming in. And the broader universe in any case is not doing badly. I think like you yourself were quoting some of the stocks right now, some at 52-week highs, some rallying. So it's not that the overall market is doing badly. It's just that where there is FII concentration, we are seeing some selling because there are outflows, which could continue for a few more days.
Rudra, I just wanted to ask you about ITC. That's seeing quite a bit of weakness today. Is it the time to probably book out profits or time to get into that stock? And a couple of these cement names, India Cement, JK Cement, seeing quite a bit of selling pressure.
See, ITC has very strong supports at levels closer to 430 to 435 range. In fact, I will definitely not sell ITC here. Rather, another 5-10 rupee down closer to those levels of 430, 435. I will be a buyer in ITC. The medium to longer term trend is very much positive, and only if you are a very short term trader, yes, you should have booked profit at higher level, not now closer to support. So I will buy ITC rather than exiting or selling at current level. Look at India Cement, another stock. This for me is in ban, but however, in F&O, lot of positive action has been seen in India Cement, and at current market price in equity, it can definitely be a buy. And for me, this stock has given a good price volume action on the upside, and it has also given breakout above levels of around 235. So any dips to those levels will now act as a strong support zone, and stock is headed towards 280, 285 kind of a level. So I will be a buyer in India Cement looking at targets of 280, 285 and keep a stop loss of 230 for this long call. India Cements looks very, very strong.
Coming in on India Cements, was just scanning the list of the highest EPS upgrades, which Somit just highlighted a short while back, and Zomato is clearly topping the list with almost a 111% EPS up move that most brokerages seem to be hinting towards. PB Fintech, a far second with a I stand corrected. It was actually LIC, which is a far third. 44% is the EPS. Headroom that most brokerages are penciling in. PB Fintech with 102%, and then of course there's HP, BP, Interglobe Aviation, Tata Motors, etc. as well. But Sandeep, you think most of the rally in Zomato and PB Fintech is done with, or do you think there's still a good buy at these levels?
PB Fintech is no story. So I don't know what creates excitement out there. So I think sporadic things will be there, but they don't have any more to speak of. But Zomato definitely is a good longer term story. Now, at what price we should be buying is always a debate. Because the price at which it should have been bought, I personally didn't buy, and now the stock's up at $90. So I think $90 it takes into account most of the near term positives. The management has given a very aggressive guidance for next year. If they are able to meet their guidance, then I think the stock will still go higher. I would think that in this kind of weak consumer environment, meeting that kind of guidance which they have put out is going to be very, very tough.
That's the take coming in on Zomato and PB Fintech. Sandeep, good to have you on the show as always. We'll let you go on that note. Let's take in some closing trade ideas as well. Rudra, what's on your list?
I'm going with two sell calls, both on private banks which are weak. One such call is AU Bank. So for me, this stock has definitely not participated in any rally when banks were actually rallying, but this stock is just moving on the downside. So at current levels, I will short available in futures. So one can sell AU Bank looking at initial targets of 675 and eventually it can even come to 630 zone. Keep a stop loss of 710 if you are shorting this in future. I have a second sell call on Indus India Bank. Strong support at 1400 is already broken and stock is decisively trading below this level. One can again definitely positionally go short on Indus India Bank. Available in futures for you to short. Sell at current market price or any bounce to 1400. Keep a stop loss of 1405 and look at initial targets of 1350 to come on Indus India Bank.
Okay, so that's the take coming in on IndusInd Bank. But Nooresh, what are your closing trades?
So that would be a one Axis Bank, a risk reward trade here. The stock is holding on to that 930, 940 mark for the last 2 weeks. If it sustains, we could see a bounce back towards 955, 960 levels in the near term with a stop loss at 935 looks a decent trade.
That's the trades coming in. Axis Bank is the one that looks good to Nooresh on these levels. Time now to slip into a very short break. But as we do that, pull up the chart of Mahindra Holidays. That's seeing a sudden spike as we speak. Rate gain is also doing quite okay. Yesterday it was Nazara Tech that was doing well. Latent View is the other one that has been holding out quite okay. Actually, Mahindra Holidays has seen a big spike. We'll wait by and see what the news flow is on that one. But a lot of these counters are actually doing quite well from the broader markets. We'll discuss these and a lot more stocks when we come back.